Good afternoon, traders. This is Christian from Tropical Trade Group, and this is your Monday video for February 6th. So to start the week, I would say, a bit of lackluster markets today. Not much really, not too much movement today. For example, if you look at the Qs today, they finished down a little bit less than 1%. But if you look at what they did from the open, they essentially did nothing. So I wanted to talk about a couple things that did move today, rates and the dollar. Before I do that, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So this will be a quick video because I just want to talk about a couple key points here. So yes, this is, when we talk about things like this, of course, it's more of a macro tape when we've got something like this going on. So if you want to look at what, bonds made an interesting move today, and they move differently across the curve. I usually look at, of course, what 30-year bond futures are doing. That's the long end of the end of the curve, the long end of the curve. They did move up 6.3 basis points, so the yields went higher there. But what was really interesting today was what the short end of the curve did today. So for example, 2-year bonds went up a total of 18 basis points. I mean, that's a big jump. So, and then if you look at the 3-year as well, that also moved up about almost 19 basis points as well. Sorry, let me just lower my volume. So, that's kind of interesting. And then, I think that there's, what people are afraid of tomorrow that I see is that that Powell is speaking tomorrow, and people are worried that he's going to talk back some of what he said last week. Let me just get this up here. He speaks tomorrow at 12 o'clock. He speaks in Washington. This is a David Rubenstein interview at the Economic Club of Washington. Well, and I was listening to the financial media earlier saying, geez, the market didn't take what Powell said. That's incorrect, because the market did actually take what Powell said and has corrected a little bit. And sometimes it does take a couple days after the Fed has spoken. So, for example, this is what I sent out on Twitter, also in the Tribeca Trade Group room, right after the last Fed meeting. This was actually before the press conference. And if you look, this is what, and I hope that you could see this, but the implied rate for March was about 20 basis points. So again, the Fed moves in 25 basis point increments, quarter of a percentage point, right? So for the March meeting, we were only implying about 20 basis points, and then really nothing after that, right? So if you look at the June, July, you're looking at 12 basis points. The peaking of the peak of the rate. Again, this is Fed Fund futures, so this is the super short-term rate. I was just showing you what the 2 and the 3-year were doing, but this is the overnight rate. And this can kind of tell you what is being priced into the market as it changes. So the high point was 4.92. Now, remember what Powell said. He said that their work may not be finished, and that they may have to raise rates a couple more times. So that was not priced into the market. Let's fast forward, well, not really fast forward, but let's look at what it says today for the March 22nd rate. The March 22nd Fed meeting. It does now indicate 25 basis points. So 25 basis points is fully priced in. Fine. All right. That was close to where it was before. It was 19. Okay. But what has changed is we're now pricing in another rate hike, right? At least another 25 basis points. And the rate has jacked up to 5.14, 5.15. Now, don't forget, this is not something that something where people are voting on, right? It's not what a committee is voting on. This is what the market is actually pricing in right now, today, right? Rates have already adjusted to what Powell has said. So it's not like, this is what somebody thinks or something like that. No, the market has already priced this in. Okay, so that kind of sets up tomorrow to be, I think, a little bit easier, because even if he does kind of just reiterate what he said on Wednesday, the market has already gone there. Of course, he could say something if he really wants to shock the market. He could be super hawkish, right, and say that they're going to do a lot more rate hikes. But for now, the market has adjusted to what he said on Wednesday. So I thought that was kind of interesting. We've been seeing, again, it's not just Fed fund futures, it's also the 2-year rate. And that's why I went over that first, right? That's a big jump. And the market is now realizing that. Again, it often takes a couple of days. One other thing that I wanted just to bring your attention to too, with the macro type stuff, right? The next CPI report comes on February 14th, Happy Valentine's Day. You get a CPI report. So I know that's on those little hearts that you get, right? Like, be mine CPI report. All right, kidding. 0.5% is what they are implying. So the expectations are, and again, it's this is what the market is pricing in, is that this report is going to come in a bit larger than what we've seen for the last report. Remember, going back a month, just to show you what the last CPI report was, remember it came in a negative 0.1 of a percentage point. So for whatever reason, and again, I don't, I'm not the one obviously who's putting the surveys out, nor do I know how they came up with that number, but they are now implying about 0.5 percentage point. So let's turn back to the markets just for a second. I want to keep, again, I'm trying to keep today's video brief. But looking where we are right now, members have kind of heard me talk about this now 5 or 6 times, I would say at this point. But we did take out this upside VPOC. It's a natural place for digestion, perhaps even a little bit of a fade. We are kind of seeing that, right? That was the high point, was taking out this virgin point of control. Now, what comes next? Well, we're kind of sitting back here at the 5-day moving average, right? There's nothing wrong with that, and in my opinion, to see some digestion, right? The market's not going to go up straight as much as many people want it to do. The market usually doesn't move in straight lines, right? Now, if this cannot hold, notice price is right down to the 5-day moving average, and the slope is starting to change a little bit. If that cannot hold, then the level that I'm fixated on is 40.71. Would that be horrible? So again, let me say that again in case you didn't hear that. Would that be horrible if we came back and back checked the top of the Fed value area? In my opinion, it would not. It would shake out some of that super bullish sentiment that's kind of come into the market a little bit and get things back to like a more realistic standpoint. So that's what I'm watching in terms of the indices. One other point too that I would make is, we've seen this big move in growth versus value. There was a nice article that I thought was a good article. Hedge funds cut bets in largest unwind since 2021 short squeeze. Now it wasn't. Remember how hedge funds are sitting. Some of them are long, what's called long short. They have longs and they have short positions. So what they're talking about is this was a reduction in both long and short positions, right? So not only did you see the short squeeze in high growth at any cost companies where the short interest was very high. So that was the one thing. They covered their shorts. They were probably, again, I don't have the data, but I'm guessing that hedge funds that was the trade that, because again, you could see the short interest, in many of these, the ARC innovation growth at any cost type names, like those had high short interest. So they had to go and buy those back. That's what causes short squeezes, but they also reduced a lot of their long positions too. When you have to, when a hedge fund covers their short positions, and they were on the wrong side of the market, they also get out of some of their long positions. And, where do you think hedge funds were positioned into the beginning of this year? Probably more into the value type trade. So some of those names have kind of come in. Notice that, you could read the full article on Bloomberg, but, I think for the most part, most of those, that unwind is probably mostly done, right? So now what's going to happen? Well, now I think, again, having your eyes on the road ahead and not behind, but, I think that you're going to begin to see things separate in terms of, I don't think that for the whole year everything is going to go crazy like it did in the first month of the year. I think that it's going to be just as we're seeing right now, a little bit of backing and filling of the previous price action. So, I am bullish on this year because I do think, if you go back to the Fed fund futures, if I still have that up, I don't, but I'll bring it right back up. But again, the Fed will be done raising interest rates, whether it's one more 25 basis points or two, which is what the market is now pricing in. Once you get past July, that's it. And of course, the rate hikes have been smaller than where they were, back in, the second half of 2022. So things are slowing down in terms of rate hikes, and then maybe we will begin to plateau, right, in terms of rates. That will still mean that rates are at a higher level. And once we kind of get past that short covering, I think things will kind of return to a more normal market. And that does happen from time to time. But my thought is, and I give you my thoughts in these videos, is that I don't think that we return all the way back to these lows. I think that you might, I think 4071, again, doesn't have to happen, but I would be more of a buyer into that area. And I think you'll begin to see some other things outperform, maybe not such straight up growth, or high growth, right? Here's what this is, again, more large cap value versus growth, right? This is back into kind of the 200-day moving average, right? There's been this massive outperformance, some of which has been short covering. So maybe this starts to kind of find some support as it did today, and you might see value areas come back a little bit. What's one area that I'm focused on? And again, this is just the tip of the iceberg, but I started to, in my end of day screeners that I run, and I do put these out on Substack. So make sure that you're signed up to our Substack. It's free for now, so you can get exactly what I'm thinking and what the screener is telling me, which is there's more things like this that are breaking out. HUBB, right? Another one is AME, which I got long today. Right. What are these things? Well, they're some of them are electrical measurement, they're flow type companies, right? There's a couple ETFs that I think are really interesting. Right. This is the infrastructure ETF. Now, I wouldn't get caught up in the name. If you look at the components, they're going to be names that you're familiar with. So for example, with any ETF, by the way, don't get, in my opinion, because I'm not giving you advice, but don't get hooked on what the name of the ETF is, right? Look at what it's holding, right? That's what's going to be the driver of the performance, is not the name, but what is actually the constituents of the basket. So a United Rentals, a Nucor, right? These are names that had pretty darn good earnings. A Train Technologies, Fastenal, which has made a nice move, Parker Hannifin. So it's a lot of industrials, but it does have that theme of a bit more infrastructure. So an HUBB is in there, right? And some of the other names, like an FTV, which also looks pretty good. Again, not the most exciting group of stocks in terms of they're not super high growth, but they're looking pretty constructive, right? Steel has been such an outperformer. So not only Nucor's in there, but it's Steel Dynamics, which is one of your best ones. So this is interesting. I actually put this on in the TTG trend portfolio today because I really like this pattern here. To me, this looks like, right, this one kind of looks like a cup and possible handle there. All right. And now, resuming that trend of where this was back in, towards the last few months of 2021, right? It kind of looks like it spent a year going sideways and now may resume going higher. Where I would be wrong is at the $28 mark. If it sinks back below 28, maybe there's more sideways. But so in any event, just sharing with you a couple ideas on what I think could excel this year, as well as some other areas too, because certainly we've seen participation increase since the beginning of the year. All right, guys, have a great night. See you tomorrow. Please like the video, retweet it, and make sure that you're signed up for our Substack. Thanks very much. Have a great night, everybody.